Every day, chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Tradin TV. This is your stage to shine.
Hello, good evening, everyone, and welcome to a new episode of Chat and Chart. This is the New York session, and this is your host, Saif Qadoura. I hope everything has been going well with you last week. We had some important moves during this week, and today we're waiting for very important numbers coming from the US, which are the non-farm payrolls, unemployment rate, and the average hourly earnings. Of course, in addition to the weekly number, which is the initial jobless claims. Now, non-farm payrolls usually, like those three numbers, non-farm payroll, unemployment rate, and the average hourly earnings, usually come out on the first Friday of each month. But since tomorrow is the closest day to the Independence Day in the US, so the US decided that they're taking tomorrow off. So the US markets are going to be closed tomorrow. That's why they decided to release the data today instead of tomorrow. So in 30 minutes, we're going to see how those numbers come out, specifically in 28 minutes. Let me share my screen and let's start discussing what could happen today. I'm going to start with the share. There it is. Hello, Monkey, Raya, Daniel. Daniel is asking what my ideology is. Like, what's the strategically? I didn't get your question. Can you please rephrase, Daniel? I'd love to answer, but I honestly don't understand the question. Hello, Social. Hi. Okay, so yesterday we saw a jump that broke above 1, 2, 3 daily highs, and then it got rejected and closed around 4,030. Today, we reached 4,075, I guess, 78, and then we're waiting for a reaction. Now, if you take a look at this, now this trend line has been intact for quite some time now. So I think it's going to retest this level, which is the 200 level. It coincides with the 126-day moving average. It coincides with the Fibonacci 61.8 golden ratio, and of course with the trend line itself. So between 200, 4,200, 215 is going to be our expected level. Maybe we'll get it like during this session, and then from here we're going to see some drop to the downside. Now, if the numbers come like way above expectations, we're going to see gold drop from here, from this level. So this could be just like what happened yesterday here. This could be just a liquidity sweep, and then we're going to move lower. So far, let me check the hourly. Okay, so on the hourly, we don't really have a proper trend. It was trending lower highs, lower lows, and then we got to this point. We failed to make a lower low, and we broke the previous high, which qualifies as a failure swing to the upside. For those of you who don't know, the failure swing is actually a reversal pattern. So a reversal pattern, not like a major reversal pattern, or like when we were talking about the reversal, we were talking about the reversal of this previous trend, which is this one here. Okay, not the major trend, because the major trend is an uptrend since 2018. If we get a failure swing on the weekly time frame or the daily time frame, then we can say, yeah, it's a failure swing to the downside. But what I'm referring to here is a failure swing on the hourly time frame. So it was making lower lows, lower highs, and then it failed to make a new low and broke a previous high, which qualifies as a failure swing. Okay, so I'm expecting it to reach somewhere around this area. So I think we'll break above 220 just to sweep the stops above this area, and then we continue dropping further. So if we just like project, yeah, so the target after it reaches here is going to be 3800. We'll wait and see. But for now, I think the bias would be bullish for now so far, because look at it on the 30-minute time frame, it's above almost all moving averages. Let me check the DXY. DXY is below all moving averages, all major moving averages. So yeah, it makes sense that it might just like drop slightly. I'm talking about gold. It might drop slightly and then continue going upwards. So for now, that's the bias, but we'll see. All right, so let me check. What questions do we have? No, Rosa unfortunately has an emergency, so she won't be attending today. She won't be joining us. Okay. What's the strategy? Like, what do you see in what time frame? What's the framework? Okay, my framework is classic technical analysis. I use classic tools such as moving averages, trend lines, reversal candle patterns such as the engulfing candle. Of course, I use price action heavily, more than anything. And of course, I keep an eye always on divergences. So all of which are tools of classic technical analysis. So nothing to do with SMC, nothing to do with ICT, nothing to do with harmonic. That's pretty much it. That's very, very simple. Okay. Nice charting. Thank you. Hello, Arif. Hi. Hi, Abhishek. Should we do buy stops or sell stop for NFP news trade? To be honest, I don't like trading NFP. Like, I prefer limits rather than stops. Why? Because if, for example, my analysis tells me that gold is going to 4,200 before dropping, so I prefer to place my sell limit on 4,200 instead of just like placing it above 4,100 just to catch a few pips or a few dollars. But then it, like, once it activates my buy stop, it reverses to the downside. And same goes on the sell stop side. So if I place a sell stop below here, which is 4,027, it might just like sweep below and then go upwards. And if we do both, you might get you might get activated on both ends. So you end up being screenshotted. Okay, that's it. So should we buy now? It seems like liquidity taking. What seems like liquidity taking, Sushil? What do you mean? Okay, so the 30 minutes is still very positive. We got up from here. So let me go to lower time frames just to confirm this. Okay. So our pivot point should be 4,050. It might reach this level, which is 4040. Might be a good place to buy with stops at around 4,026 or 27. So yeah, that would be good, because that would be buying off the 50% retracement of this engulfing candle plus the 126-day moving average. Okay. So yeah, if I see it at around 4040, I'm buying. we say buy limit, say 40-40, stop loss 27, and TP 4,200, please. Okay. Yeah, that's a good trade if it works. So I placed a buy limit here at 40-40, where it stops below this area. So let's see if it works or not. And I'm targeting 200. So it's a 1 to 12. Now, looking at how big the risk reward is, you should automatically know that it's a low probability trade. So I won't be risking much, like 0.25% of my account on this trade. But if it works, it's a really, really nice win to bag, which is a 1 to 12. So yeah, that would mean something around, let me check. So it's 13. How much is it? Is it like, I think 3%. So 0.25 multiplied by 12. Yeah, it's 3%. Are you a prime trader of funding pips? No. Prime is very, very recent. It's a new thing. It's a new program. But if you actually join Prime, you might get to trade with me, and you might get to get mentored by me. So yeah, let's say I'm not a Prime trader, but I will be somehow responsible of Prime traders. Okay. Can you explain yesterday Kevin Moore's speech if you watch them? Okay, so nothing new, Arif. Basically, what he said is that they're going to they address the war and the inflation risks, and nothing pretty much like the same. They didn't change anything. He said they're going to wait for economic numbers to take or to make their decisions. Before that, they're not going to assume anything. That's basically what he said. Okay. By the way, speaking of Prime is actually a very, very great opportunity for traders who are aspiring to become professionals, because like trading for props is one thing, but being like a consistent trader who trades professionally with the top traders of that same prop firm is something else, because the opportunities you will get, the job offers you might get, and the unlimited um, yeah, unlimited opportunities, actually. Yeah, I wouldn't be exaggerating if I said unlimited opportunities, because imagine you turn out to be this killer trader. What happens next? You might open doors to bigger things, such as a great employment on great trading floors. You get a verified track record. You could be hired at hedge funds. You could be like, honestly, sky is the limit. So Prime is a great thing to invest in. And you wouldn't get the Prime designation before you get 3 or 4 payouts. Yeah, so it means you should be consistent before you can call yourself a Prime trader. If bikes was not decided, but having levels for short or long, is it valid plan? Bikes was not decided, but having levels for short. AviFX, can you please explain more what you mean? By the way, we're 15 minutes away from releasing the NFP. Yes, Yahya, I can see your messages. Hello. How's the account going? What's happening here? Yeah, so I guess even Euro USD is confirming my view that um, we'll see some positivity on everything else against the dollar. Okay, so when is the next Fed meeting? One second. The next Fed meeting is going to be on July 29th. So a month from now. Yeah. So just a scenario. The scenario goes as follows. What if gold starts climbing from here and then reaches around 4,200, 250, and then starts consolidating? Yeah, actually, that would take a month to end this move. And then when it starts dropping, it would drop to 150, and then it will go back to 200, and then it will start dropping by the time Kevin Walsh says we're still hawkish. So that would be the last um, drop, actually, or the last leg of drop for gold, which I'm expecting to be between 3,600 and 3,800. It's going fine. Good to hear. IVFX for now, I don't have any buys because the structure looks a little bit tough, but I have a level for buys and sells, so I'm asking I should take them or skip. Depends on how close or far they are. Now, if you're entering based on a plan with not very tight stops, you can do it. But if your stops are tight, the volatility is going to be very high during the release of the NFP. So you might just get stopped out for nothing. So if your stop loss is um, $10, $15 or less, I say skip it. But if you're looking to swing it, then that's a different story. Say, brother, for you as a pro trader, how much do you use account size per trade? Okay, now Daniel, for daily trades and scalps, I don't go and low probability trades, of course, such as this one, the one I just showed you here. For such trades, I don't go over 0.25 or 0.5% of my whole account. But sometimes on bigger trades, I don't know if you watched me before or not, but I usually take from somewhere between 15 and 25 trades in the whole year. So I go swing trading more than scalping and day trading. So on those trades, which are the swing trades or the position trades, sometimes I risk 5-6% per trade. So yeah. AVFX, it's a scalp. No, I don't recommend scalping during the news. It can drop to 4,000. Yes, it can. I want a course about fundamental analysis like you do in technical analysis. Actually, stay tuned with funding pips because I did something with funding pips on fundamental analysis and economics, and you're going to love it. It's one of the best projects I've ever worked on. So you're going to enjoy it. There's going to be a whole series about fundamental analysis and economics. So just like stay tuned with funding pips. Great things are on the way. And by the way, I'm done filming it and I'm done working on it. So it's almost out there. Okay. Do you see how this 200-day moving average, the black line here, the black moving average is just like very solid grounds under the price. But I think when the numbers get released, it's going to like penetrate it like uh, shortly and then go back up. It wouldn't close below. I doubt it's going to close below this level because it's showing so much strength. But um, yeah, I have to wait and see. Okay, and then this. Okay, so that's the low. Yeah, it's 52. We need to watch for 52. It might not break below 52 if it's going to go up. So this trade is also not very high score. As I said, it's a 1 to 12 risk reward. It wouldn't be this rewarding if it wasn't this risky. So it's a low probability trade. Okay. And the most important question, did risk reward matter or matters how much realistically? Yeah, it's actually what matters. Risk reward matters a lot according to my uh, trading system. Now, some people like Rosa, who didn't join us today, uses a negative risk reward because she has a very high win rate. But for me, I don't have um, that win rate, which is very, very high. And when I say very, very high, it's above 80%. So um, my win rate is somewhere between, like, it's floating between 60% and 65%. So risk reward is actually important for me. And it does all the difference, especially when you're in losing streaks. So you lose the first time, the second, the fourth, the fifth, the sixth, and then one trade comes and you're back in the money and you're back in profit. So yeah, it matters a lot in my trading system. And my trading system is actually built around risk reward. And my position sizing is based on my risk, and my risk is based on my risk reward. And the whole system, the techniques that I use are actually like revolving around um, the risk reward. So yeah, it's very, very important. Do you still do back testing? Of course, yes. Not as much, to be honest, because I don't want to be like lying to you. But I do back testing sometimes, especially when the like I do it maybe once every month, once every 2 months, when I want to try something new, or when I want to test one of the theories I have, or if I want to connect two different markets and see how, or connect two different instruments or like assets. So yeah, sometimes I do back testing just to see how it used to work historically, because trading is mainly predicting the future by reading the past. So if one of the principles of technical analysis is actually history repeats itself. So the newest version of that is even if history doesn't repeat itself, but if it doesn't repeat itself, it rhymes. So you will find some similarities between what's happening today and what happened yesterday. And since you know what happened yesterday, you have a very high probability of predicting what's going to happen tomorrow. Okay. So how are we doing here at 68? How far are we? We are 4 minutes away. Okay, 4 minutes away, guys. You can do it on TradingView, you can do it on MT5, you can do it on simulators, you can there are many tools. Well, I'd go with what's it called? TradingView. Now, there's something about TradingView. If you don't have like a good subscription or like a high subscription, sometimes you don't have enough data to backtest. So that would be a problem. So you would need to go to another um, uh, platform, let's say. Would I consider the Hi, Mr. Briva? Would I consider the bullish engulfing that formed on the 126 simple moving average on Nasdaq 100? Which time frame, Bravo? Let me start with an hour because, yeah, that's actually a very good engulfing candle. Great catch. Yeah, that's a very good catch. On the 4 hours. Also, the 4 hours is forming one as well. Yeah, that's a very good catch. 5 minutes, so that we see the reaction more clearly. Hi, Mesa. No, I haven't, Yahya, don't worry. I haven't. We're going to go through them today. But, so do you say, 1 second. So what do you say as pro traders or rather the traders, those who are beginner or just started? So do you teach? Right. Okay. Currently, I don't teach because like I'm a little bit tight on time. But if you have any questions, I'll be more than happy to answer. Like just like DM me on Instagram or wherever, and I'll be more than happy to answer you. Mesa, hi, say this is my friend's question. When he gets an entry during position sizing, his entry gets missed. Oh yeah. So yeah, probably he's scalping or day trading. That's why he's missing the entries. There are tools for this, such as Magic Keys. It calculates the position size automatically. He just places the entry, stop loss, and TP, and then hits execute, and it executes. Okay, so we are 14 seconds away. Let's see what will happen now. Okay. One second. Okay. All right. We're jumping. Yep. We're at 4,100. Yep. The unemployment rate actually came very positive. The non-farm payrolls came very negative. It's much lower than the forecast and much lower than the previous, which actually suggests that the labor market is facing some problems at the moment with like the Fed is having a problem with the labor market because raising rates would harm the market even more. Wow, that's such a big jump. Obviously, it didn't fill my entry, but I could have entered here on this engulfing candle, but that would have been very risky. So yeah, what happened here, the 57,000 jobless, not jobless, non-farm payrolls in comparison to 114,000, is actually bearish, or that's actually dovish for the dollar, it means that the Fed cannot raise rates anytime soon because they would hurt the employment, or they would hurt the labor market. So just to remind you, the Fed has two jobs: to control inflation, which they do by increasing rates, and sustain the maximum employment, or achieve maximum employment within the economy. So if they see that jobs are becoming less and less because of high cost of borrowing and high interest rates, they might cut back on hiking rates or raising rates. So that's why that's bearish for the dollar and bullish for everything else. So the euro is now at 1.1435. Gold is at 4,110, and the dollar is just below 101 points. Okay, so look at this drop. Yeah, it looked like it. It looked like it, yes. So let's take a look at higher time frames. Okay, so the dollar might stop somewhere around 100.4, so somewhere around here, while the euro might stop somewhere around, 1 second, somewhere around here, which is 1.1480, 1.1490. That would be a good place to stop for euro. 1 second, so let me do this. And if you project it from here, then yes, 1.1480, 1.1490 would be a good place to start selling euro again. And as for the gold, we're expecting to see between 4,200 or 4,250. So somewhere around this area here. Okay. Pop, pop, pop. Is there any other way to have a pre-order at a certain area where price comes in order? I didn't get your question, Miza, the second one. Is there any other way to have a pre-order? How much your trade holds like days? Okay, so some trades I hold for like a week, some for a couple of weeks, some for months. And like my average holding period, I think, is around like 2 months. So yeah, that's my average holding period. Sometimes I'm talking about the swings, of course. Now, sometimes I hold trades for over a year. I remember I had a Euro USD sell, which stayed with me for a year and a half. Hi, David. Best in the game. Social Sif, please, let's talk about the USA 37 trillion debt. Okay, so what about it? What do you want me to talk about? They have a lot of debt, but you know who they are indebted to? Themselves, so which makes it a bigger problem, because every time they come close to running out of money, they print more money. So yeah, the system is somewhat rigged. Okay, so our analysis is showing is playing out nicely, actually. So what we will need to do is to find the sell somewhere around this trend line, which is 250, with stops above. Oh wow, that's a very big stop. Look, let me show you. So we might, like, you know what, if we reach 4,300, that would even be better than 4,200. Why? Because if we project it from here to 300 and something around this area, yeah, That would actually be better than this. So we'll have to wait and see. But for now, it's moving steadily towards 4,200. Okay, 30 minutes. Yeah, it's moving towards it. Let's remove this. 15 minutes. It's doing well. I have an alert at 4,200, so when it reaches there, it will inform me. Yeah, they print money out of thin air. I watched somewhere by 2036, their debt will double in the next decade to 64 trillion. Yeah, that might happen. To consider the bullish engulfing that formed on the yeah, Mr. Breva, I already answered you. I told you that's a great catch. What's the most of your favorite technicals like trendline, Fibonacci, or any trend lines? Win every time because they keep you grounded and they keep you focused on what matters the most, which is the trend. I can safely say that I'm a trend follower, so I don't mess with ranging markets. I like only trending markets. Okay, so now time for the I'm not gonna call it a master class, but let's call it a crash course on trend lines and moving averages. I'm going to start. I honestly haven't prepared anything for this crash course, but I'm just going to improvise. And if you have any questions, stop me and ask me, please. Okay, so what are trend lines? Let's start with trend lines. So in 1 second, where's the brush? Where's the brush? I think it's here. Yeah. So what happens if you connect two dots? Like, let me make them bigger. 1 second. Let's make it bigger. 1 second, guys. Okay. So I have a better idea than the brush. We'll go and do circles. Do another circle here. Okay, so those are 2 points, right? So connecting between the 2 points is what? If you do this, what kind of trend is this? I want answers from you guys. Tomorrow deposit on trade and we get on a bonus. If I face an issue, I will update you. Okay, Arif, good luck. Good luck with that. How do you manage to enter at alerts as you don't know when the price will come? I mean, a day or night. How do you manage entry window? Do you have an entry range? No, let me tell you what I do with alerts, Mesa. What I do is I place an alert before the start of the area that I'm planning to get a rejection from. So, for example, my area is between 4,200 and 4,250, or like 4,250. So it's between 200 and 250. So I have a $50 buffer. What I do is I place my alert at 4,200. So when it goes off, I open my charts because I don't stay on charts all day. What I do is I check the charts once the alert goes off. And from there, I start seeing or I start watching or observing what the price action is doing. And I start looking for my own setup around that area. Okay. So not only I wait, but after I wait some more. That's what I do. So once it gets to my alert, it goes off. I open my chart and I keep looking and watching and searching for my own setup. Once I get my setup, and this could take a lot of time, sometimes you spend days just waiting. So once you get your setup, you go short or long depending on the trend. Okay, so let me make sure what's your favorite. All right. Meza says straight line. Daniel says bullish. Sushel says uptrend, bullish trend. A lot of people are saying uptrend. It represents bullish, but it depends structurally. Bravo, Meza. Trend line from with at least three form with at least 3 points. These are 2 points in a line. Bravo, Meza. All right. So in math, if you connect between two dots, that's what? That's a straight line, not a trend line. Regardless of how it looks, like if it has a slope to the upside or to the downside, it only connects between 2 points. So let me show you another way. So connecting between two dots, so this is the first point here, this is the second point, and this is the third point. Okay, so we have 1, 2. If we do this, if we connect these two bottoms, is this an uptrend? It's connecting between 2 points. No, that's not a trend line, that's a straight line. So what you need to have to get a trend line is at least 3 points or more. Okay, so that's how it would look like. Okay, it would look like something like this. So this is a trend line. Here, this is a valid trend line on the right. On the left, it's not a valid trend line because it only connects between two lows or 2 points. Okay? 2 points in line. Abhishek, are there any buy setups now? There might be, but I'm going to be explaining the trend lines and moving averages. Okay, let's go. All right. On using trend lines, how are your entries? Do you use break and retest? Okay, so let me tell you how you use trend lines. Okay, and we're going to talk about when trend lines break or when trend lines actually get penetrated. So let's say this is a trend line here. What happens here, guys, is usually trends respect a certain slope. So once you have three points or more, okay, like this here, we have 1, 2, 3, 4, 5, 6. Okay, we have 6 points. After it got confirmed after 1, 2, and 3 points. At this point, if it we draw the trend line. The first time it reaches to the trend line in an uptrend, the trend line acts as support, and you can buy from here with your stops. You can buy from here with your stops below the previous low, because in order to have an uptrend, okay, in order to have an uptrend, you need two things. You need higher highs and higher lows. Okay, so why did we place the stop loss below the previous low? Because if it stopped making higher lows, it means that the trend line is invalid, or like it got invalidated. So that's why get me out of this trade. I don't want to get stuck against the trend, because it might start trending downwards. So for example, if it breaks here, what could happen? We could start doing this, trending downwards. So if I don't have my stop loss here, what would happen to me? I would get stuck in the market, and it would eventually burn my account and liquidate my account. Okay, so this is number one. It goes up, you collect your what's it called? You take your profit, and then you wait for it to go back to this area again, which is the trend line. You buy again, and you target a higher high, and then you start again you wait for another retest on the trend line, you buy with your stop below the previous low, and you target a higher high, and so on and so forth. Now, another variation of trend lines. Okay, so since this is wrong, I'm going to delete it. Okay, we don't want wrong stuff. Another variation of trend lines would be what? Would be channels. Okay, so I'm going to fix this to fit a channel. So with channels, I call them gold cows. That's what I call them. You can actually make a lot of money, and you could trade with such certainty when you have uh, a channel, like a parallel channel like this one. You can use this tool, which is the parallel channel, or you can just like copy this trend line you have here. You do copy and paste, you take another one, and you take it and place it above the tops. Now you have an upwarding channel. All right, so how does the channel help us? When we had the trend line, we were able to wait for the price to retest the trend line for us to buy, correct? Now, what happens if we have, or what's new if we have a channel? We have clear take profit areas, which are the top of the channel, because it's moving with such harmony that it's making harmonious tops and harmonious bottoms. So it's not only like it's not only complying with the slope of the trend line, it's also making there's a word for it. What is it? English as a second language, man. Okay, so yeah, the tops are also very harmonious. There's another word, but like my English is not helping me at the moment. Um, yeah, so what we do is we place buys here, for example. We place a buy here with our stops here, and our take profits at the top of the channel. Same with the next one. We enter here with stops below the previous low and TPs at the top of the channel. And then we go here, and usually, since it's very linear, if you can notice here something, it gives you almost exactly the same risk reward. So when you catch a channel, that's like a money machine. Like you just keep printing money out of the channel as long as you can. So that's how channels work, which are a variation of trend lines. Now, obviously, we also have downtrend lines. So to get a downtrend, you need lower highs and lower lows, correct? What do? We connect the tops. Can we sometimes get bearish channels? Of course. We can get bearish channels. Now, what do traders do? Sometimes, like aggressive traders, like in this case, when we have a downtrend, we sell here, for example, with our stops above the previous high, and we target the bottom side or the bottom end of the channel, correct? Now, some aggressive traders, what they do is they take profit here on the sell, and then they open another buy, and they go up, to this trend line. So they do this. They sell here. Actually, 1 second. This is the sell, and then after it reaches here, they take profit on the buy, and then they enter a buy. They exit the sell, sorry, and they enter a buy, targeting the trend line, the downtrend line, and then they close this again, and they keep going. Now, I don't like going against the trend. Some people do it. Some people are like more aggressive. They have a higher risk appetite. For me, I like to be in peace of mind while trading. So trading is already hard. I don't want to make it harder. So I only go with the trend. I never go against the trend. All right. Pop, pop, pop. Okay, we covered that. All right, so now it's time to talk about the fake and the valid penetrations of trend lines. Now we have this trend line, right? Like, sorry, like this downwarding trend line here, correct? It's very clear, very nice, all good. 1 second. Okay, now what happens if we fail to make a lower low here? We fail to make a lower low, and then we go and break above this high, the previous high. This is what I just mentioned. This is the failure swing. It failed to break a new low, and it went above and broke a previous high. Now, why is this a very important reversal pattern? Because it invalidates or it breaks the only two rules that trend lines have, which are in a downtrend, it needs to be making lower lows and lower highs. Here, it failed to make a lower low and it made a higher high. So it broke the two rules of the downtrend. Okay. So how do we know that this is like a valid penetration here, or if it's just like an intraday sweep or an intraday correction? Now, if it wicks above and then closes below, then that's just an intraday penetration. It doesn't count. It doesn't matter as much. But if it closes above the trend line for 2 consecutive sessions or like 2 consecutive days or like over the weekend, then yeah, this has a higher chance of being a reversal in the downtrend. Okay, this is number one. Number two, we measure the space or we measure the percentage from here to here. If it's more than 1% on low time frames, like if it penetrated for 1%, which is this much, if it penetrated by 1% or more, then that's actually a valid break of the trend line. But on higher time frames, because 1% is not enough on weekly time frame, for example, so you go for 3%. So if it breaks and closes above beyond the trend line by 3% of the price, then yeah, this is a valid and this is a real break to the trend line. And what would you do when this happens? A lot of you will say, you know what? Yeah, it made the failure swing. Safe told me that it's a very good reversal pattern. So what I'm going to do is I'm going to buy here, place my stop below this low here, and then target higher highs. But what would happen is, like, what should happen is as follows. It went up here, right? It broke the trend line, and now we know it's a valid break. What we would wait for is something like this. So tech, tech, and then, and only then, we can do something like this, because we want 3 points. We only trade using what? We only trade using trends. We only follow trends. So at this point, before this, did we have a trend? No, we had a straight line. Now, after this, how do I bring it back? Yeah, here. Now, after this, we have 1, 2, and 3 points. Now it's a valid trend line. From this point on, we can actually rely on this trend line, and every time it retests the uptrend, we buy with our stops below this area, below this low, and we target higher highs. I hope it was helpful. Okay, when trend changes, we answered that. Aggressive trading thing, ignite, greed, and liquidate. Only for me, I don't know how they handle. Yeah, neither do I. I don't like aggressive trading. change of character and market. But what's the time frame you prefer for trend lines? Trend lines work on all time frames from 1 minute to 1 month. Now, obviously, the higher time frame or the higher you go in time frames, the stronger those trend lines are and more important they are, because like breaking a monthly trend line that has been going for 15 years is much harder than breaking a 1 minute trend line that has been going for the past hour. It makes sense, right? Okay, so now did we get everything we need to get about trend lines? So just to recap, in an uptrend, you need two things. You need higher highs and higher lows. In order to call it an uptrend, you need to connect at least three bottoms before you can use or utilize this trend line. In downtrends, is the exact opposite. You need lower highs and lower lows. And by connecting the tops of the downtrend, that's how you get the trend line. You get the trend line by connecting three tops or more, not less. Three tops or more, and then you can utilize this downtrend line. Sometimes we get lucky and the market gives us a gift, the gift of channels for us to use for entry and for exit. Now, the trend line is good for entries, but the channel lines are also good for exits because we know where to target or where to take our profits instead of just like reversing back to the trend line and just like wasting time on the way up and the way down. You can take your profits because you know that it's most likely going to stop at the channel line. All right. Valid breaks of trend lines, they need to go 1% beyond the trend line for short time frames. We're talking 1 hour, 4 hours. That's in the books, those are short time frames. If you go daily and weekly, you need to get at least 3% before you say that's a valid break to the trend line. Intraday, like fake outs or like wicks, like if it breaks above and then closes below the downtrend, that's a fake out. That's not a valid break. And in the uptrend, if it breaks below the trend line and then closes above, that might be just noise from the news, from whatever event that happened in the world, but it doesn't count as a valid break. Another filter that you can use to confirm whether it's a valid break or not is if it closed above the trend line or beyond the trend line more than one session or more than 1 day. That way or this way, you know how valid this break is. Okay. So that's pretty much it. That's pretty much everything about trend lines. Now it's time to talk about moving averages. So moving averages are actually trend lines, but they're much more fluid than trend lines. They are like what a moving average is. It's basically like taking each close as a point. Okay, so for example, if we're looking at the daily chart, each daily close is plotted as one point on the chart, and then it's connected, which shows you the overall trend, but not as a straight line, as a smooth line. Why is this more beneficial than a trend line, or why is it more fluid than a trend line? Because it moves with the price. It's not just a straight line and you wait for the price to get to it, and sometimes the price never gets to it. So you miss out on trades. So or you enter way too early or way too late. So what the moving averages do, they actually move with the price, so they give you a better um, um, image on what's actually happening in the market or what's actually happening within this what's it called, within this same instrument, which is gold, silver, euro, USD, JPY, whatever. Okay. Hello, Madara is back. Also, how many touches does it do before possibly reversing? I'm not sure I understood your question, but you mean like after the 15th hit, usually it reverses? There's no such thing because I know trends that have been going on for the past 17 years. So like there are no like set amount or a set number of touches before it reverses. It like trends go on forever unless they prove otherwise. That's the mindset I want you to enter the market with. Trends go forever unless they prove otherwise. This week, gold selling the price. What do you mean, global online? Welcome back, Madara. And how you prepared for liquidity, like for stop loss? What you look beside the trend or break even? What do you say? Um, I think this is a second part of your question, so let me. Do some assets respect trend lines more than others? Not really, no. Like maybe they're less volatile, so you get less penetrations. Yeah, that's possible. Of course, like the Euro USD is much more compliant with trend lines than gold or Nasdaq because of their nature. Their nature is very volatile and very risky. That's why you see like it's much harder for a trend line to hold on gold or Nasdaq than it is to hold on euro. And we're talking especially low time frames. On higher time frames, it all becomes pretty much the same. Best time frame for entry. Best time frame 1 minute for entry, not for analysis, because it's the most specific. What's your thought on USD JPY as it's breaking its 40-year lows of? My thoughts are the Japanese government is going to intervene any minute now, and the markets are actually challenging the government to do that because we're seeing a heightened demand on the carry trade. The carry trade is basically what? You borrow JPYs and then you sell them, you exchange them for USD, and then you go and buy government bonds in the US. Why? Because the JPY is cheap, and then when you exchange it, you make it more cheap, and you invest in another economy or another high yielding asset, such as the US government bonds. You cannot buy US government bonds with JPY. That's why you change them into USD. If you want to buy Japanese government bonds, they would not pay you as much as the US government bonds do. So what people do, or what investors do usually, they do something called the carry trade. They borrow the yens, they flip them into US dollars, and then they invest in the US economy for higher returns, obviously. So this keeps making it weaker and weaker. And how you prepared for liquidity, like for stop loss, what you look at it besides the trend or any break even, what do you say? Daniel, can you please rephrase your question? I'm having a hard time understanding. Good evening, Soham. Rosa has an emergency. She's not joining today. So yeah, I think that's pretty much it. Okay, so guys, on the same logic of the valid breaks of trend lines, how did we know that this break of this low here, remember this low here, which was 4100, how did we know that this was actually a valid break? On the same logic that we saw on the trend penetration. Now we closed, look at the daily, we closed below, okay? Then we went back up, and then we closed 1 time, 2 times, 3 times, 4 times, 5 times below this. So for 5 consecutive days, we closed below this. So this gives us the impression that this actually was a valid break of this support level, which was the 4100. So the same logic works almost on everything or all tools in technical analysis or classic technical analysis specifically. It needs to add up. It needs to add up eventually. Now, there is something in technical analysis which is called what? The fan principle. Okay, so let me explain it real quick. First, let me start drawing this trend line, and then we draw this trend line, and then we draw this trend line. Okay, guys, so what does this look like? It looks like a fan. You know this fan that they use in Japan? So the fan principle goes as follows. We have this trend, and then it broke below this trend line. What you do is you draw another trend line like this one here, okay? And you keep, either it continues trending upwards, and this is just like a break of this low, but the slope of the trend line is slowing down. So you continue trending up. So you give it the first chance. You give it two chances. The first one, it broke this, so you gave it the first chance here, okay? Maybe it will continue trending upwards. So if it continues trending upwards, then fine. But what happens is that it reaches here and then starts trending here, and then it breaks another one here. Okay, it could continue trending upwards. If it does, then great. If it doesn't and it breaks below, what did we get here? We got 1, 2, and 3 points, which make what? Which actually make a downtrend. So in technical analysis, all tools have to add up. All tools have to confirm each other. That's the beauty of technical analysis. You cannot get something that gives you one signal or one finding, and another tool that gives you the exact opposite finding. Like, there is no way on earth that something is telling you the trend is continuing and something else telling you the trend is reversing. There's no such thing in technical analysis. That's why I personally love it, because it gives me the enough amount of certainty to trade the markets with confidence. That's why I like technical analysis. But of course, it's only good if you understand it well. You are welcome, Social. You are welcome. How do you like to stop loss or when trade is a minus drawdown? I don't look at my trades, to be honest. Like, I just take the trade. Like, the hardest part of the trade is before the trade. While you're in the trade, you're inside the trade. Like, the rest is in God's hands. Like, what can I do? Like, I just place my stop loss, place my TP. Sometimes I do trade management if like it's in my favor, like deeply in the money. Sometimes I move my stop loss to break even to protect my capital. Sometimes I keep trailing my stop loss upwards or downwards depending on the trend. But how do I react when I get a stop loss? Nothing at all, my friend. Of course, if it's a big stop loss, I'd be mad on the money I lost, but like, I'm not mad at myself, I'm not mad at the market, because like that's part of the game. Like, if you don't lose, you will not make money. If you're not risking money, you can never make money. So yeah. Yes, improvement. I like certain ways of doing it. I'm honored, guys. Thank you. You have all tools exactly written in technical analysis book. At start, I thought this book is outdated. Then I observed you are trading so closely and learned the book is still bad. Yeah, I got everything I know from like the Bible of technical analysis, which is technical analysis by John Murphy. عارف, I already, I don't know if, was it you who asked before? Who asked me about Kevin Walsh yesterday? Okay. So, again, the main points were like nothing new. What Walsh said yesterday was basically that they're paying close attention to inflation risks caused by the Middle East war, and of course, they're going to be watching the labor market data closely, which we got today, and they're going to take it meeting by meeting, like or on a meeting by meeting basis, and they're going to decide what they're going to do with monetary policy, and they're going to do what's in America's best interest. That's pretty much it. Nothing new. They're going on a meeting by meeting basis. Any advice on gold right now? Not really. For me now, I'm waiting for gold to reach 200. For me to do what? To sell. Now, do we have an uptrend here? We have 1, 2, and 3 points. 1, 2, 3. So that's an uptrend here. That's a valid uptrend, correct? It's 1, 2, and 3. Now, connecting those would be very hard because like it accelerated way too fast. So sometimes what I like to do is this. I skip this part because those are like a bunch of 15-minute candles that look like a wick on higher time frames. So what I do is I connect this with this, this, and this. So this way, I have the new slope of the trend line, or as the book says, as technical analysis books say, what you do is you draw this, and then you draw the speed line, which is this. But you will get the exact same result, which is like some data outside the trend line. That's what moving averages are good for. They move with the trend, they move with the price, so they give you the better trend. So if you take a look here, by connecting those, they coincide with what? With the 50-day moving average and the 20-day moving average, which makes like shows me that this trend line is actually valid. So I'll be depending on it. Anytime it reaches here, for example, 4,080, I might be buying with stops below the previous low here, below the trend line. But for now, we're trending upwards, and that's a very, very big push. Look how big that is. So, yeah. And this is actually a bullish formation here. So it's going to replicate this very soon. Okay, so yeah, we might be looking at something like this because this is the flagpole and this is the bullish pennant. So we might be looking at, yeah, 190. Actually, you know what? I'm going in. I am going in. Okay, I'm in. Stop loss is what? 111, 110, 111. Yeah, already in the money. Great. Stop loss is 111. And the TP is 190. Yeah, 185 is good. I think 185 should be good. Okay, so who can tell me why I entered this trade based on what I always say? Who can tell me why I entered this specific trade? I'm going to help you and go to the 5-minute time frame and see if you guys caught the reason of why I entered this trade. Okay. You read books, still do some idiotic stuff. At the end, everything is right. Yeah, you're a human. That's very normal. No problem. What that was me, but at the time I was driving car, and now especially part car for your golden session. Thank you. I'm looking for a sell at 201 with stop loss at 262. Wait for a setup. Like, do not just like wait for a specific number because it could just continue going up, correct? So yeah, you need to wait for your setup. You know why my stop loss is at 11. Great. Do you advise it for a trader not to think while executing? If you've been executing for a very long time, yeah, you can, like, you wouldn't need to think because you would be acting upon what you've been doing for the past, like you'll be acting based on your second nature, which is you learned, you've been doing this for the past, I don't know, 10 years, so, or 5 years or 4 years, so it became a second nature to you. That's why you don't need to think. It becomes mechanic, it becomes automatic. Yeah, so but if you are still new to trading and if you're still a beginner, no, you will need to think because you will need to calculate your position size, your risk, how much you're going to risk, how much you're going to lose. If this is already planned, while you're executing, you shouldn't be thinking way too much unless it is needed. But it is really needed to think while executing. You need to think before actually approaching the trade in the first place. You need to plan it. What I can see is that I touched the third point on the 1-minute time frame. Let's go. You entered based on pennant pattern. Correct, Arif. Yes. But not only that, if you go on the 5 minutes, it's basically I entered on the middle of this engulfing candle here on the 5 minutes with stops below it. And when I saw the potential to the upside, which was the flagpole, which would look something like this, I thought, yeah, why the hell? I'll just enter it and like take this trade. It's worth it. Even if I lose, I entered at 120 by the way. Even if I lose, look how much I'm going to lose and look how much I'm going to make. So is it worth it? It's a 1 to 7. It's definitely worth it. Yeah. Earlier, I missed the 1 to 12 because it just kept going from there. It didn't reach 40-40. But at this point here, I got another chance. So why not take it? By the way, I'm slightly in the red now. I'm $3 away, so 30 pips in the drawdown. It either hits 11 and then continues dropping to this level, which is 96, 95. If it holds, it holds. If it doesn't, it will go to 4080. 4080 is actually a very good place to buy from. Let me place an alert here, just in case this does not work out. If this does not work out, which is also, as you see from the risk reward, it's a low probability trade. So if it doesn't work, I want to enter again at 4080. Makes sense? What do you think of fair value gaps? They work. Like I know some people who use fair value gaps, and I've seen traders who actually worked for me in the past who actually taught me about fair value gaps and showed me how they work. And I'm not gonna lie, they're very, very impressive sometimes. So yeah, fair value gaps are good, but like I think you're asking this question because we're looking at one right now, which is this. So it should be around what what is the fair value gap? It's here. It should go back to 4070 based on the fair value gap theory, right? Like it should fill out all this gap before continuing to go upwards. But if it's going to do that, it doesn't need to do it right now. Correct? That's what I know about fair value gaps. It doesn't need to be the same session. So it can go up to 200 first and then go down and close this fair value gap. Correct? Just like any other gaps. Just like any other type of gap, sorry. Oh, I've been talking for nothing. No, oh my God. I was telling you guys that um, this trade is low probability and it has um, like it has a very low score because it has three confirmations in comparison to the usual seven or eight I wait for. But that's fine. Uh, and I was joking about. I was asking who asked me how I feel after I hit a stop loss. Look, this is how I look after I get a stop loss. I got stopped out, by the way. So yeah, absolutely nothing, brother. I feel nothing because you enter the trade with the intention, or not the intention, you're already prepared psychologically that you might lose this money. So you shouldn't be feeling anything. And that's pretty much it. Yeah. So I'm going to give this formation another chance, but only if it like turns out to be actually good. Otherwise, I'm waiting for the 4080. That's why I placed an alert here. That would be actually a high probability trade. If you buy at 4080, that would be actually a pretty good trade. Yes, about to ask a follow up question. You addressed it. Thanks for me in liquidity. Okay, at 209. So yeah, Yahya, I hope it closes the fair value gap today. I hope. This way we take a proper trade. Mesa, is it 209 or 220? Can you please check and let me know? Are we done with the lectures on moving averages? Actually, no. What did we talk about at moving averages? Do we say anything? You said they're basically moving. They're basically trend lines that are smooth and they move with the price. Next time, I'm going to keep it light this time because like too much information today. And next time, I'm going to teach you how to use them as the book says, which is the golden cross, the death cross, and like the whole thing. And I'm going to teach you how I use them, which I did many times before. I told you how I use them. Okay, Arif is saying, I am confused. Jobs data came out much lower than the previous and the forecast, but still, unemployment rate came good at 4.2. Why? Can you explain, please? Now, I can't give you the exact reason why because I'm not like a US official, but that happens. Like the non-farm payrolls shows you how many jobs were added in the economy. Now, sometimes unemployment, you know what unemployment is, right? It's the willing and searching individuals. So maybe people are not looking for jobs now, or not. They're not looking. They're working the jobs that are seasonal, which do not get calculated in the unemployment rate, such as lifeguards, summer jobs, and don't forget now in the US they have the World Cup, which could actually be the reason why people are not claiming to be unemployed and they're not seeing any or they're not showing any willingness to work or any availability to work. That's why the unemployment rate shows 4.2 while very few jobs were added last month, which were 54,000 in comparison to 114,000. So why? I think it's because of the seasonal jobs currently happening in the US, especially with the World Cup going on. Is that moving average? Yeah, it is, Patrick. You're right. It's 220. Okay, thank you for confirming. No need to be sorry. No, I was just confirming. Yeah, okay, great. I took a lot of notes. You gave me a lot of condensed information in such short amount of time. As always, thank you very much. It's a privilege learning from you. It's a privilege sharing my knowledge with you guys. It's always an honor, honestly. So, what's happening here? Okay. So, guys, what do you say? We give it another chance or not? This this formation. Should we give it another chance? And what happened? 200. So this closes in 3 minutes. By the way, NYSE opened 2 minutes ago, and this is the NYSE open candle. So let's see how it reacts. Let us see. Do you read same price with your tools? Let me know. I am a little excited. I looked without mouse and with little zoom out. I misread. I apologize. No problem. What do you mean I read the same price with my tools, Mesa? Yeah, this is looking good now. So I might give it another chance. But not now, after it closes. Yeah, I think this deserves another chance. We have 1.5 minute, 1.5 minutes before it closes. So we'll see how it goes. I'm giving it another chance, but it's not giving me another chance. It's flying from here. No FOMO, no nothing. We're waiting. Whatever happens, happens. Not really, Mesa, no. We all use basically the same tools. And by the way, like the simpler, the merrier. So I don't use very sophisticated tools. My tools are very, very, very basic and very simple. And I think that's one of the reasons um, I managed to become profitable because it's very subtle and very simple, and that suits my personality. I don't like complications. I like straightforward things. So yeah, like don't expect that because I'm on this side of the live stream. I have sophisticated tools. On the contrary, I have very simple tools, and I use very very simple tools to read the market. Okay, so it closed as a bullish engulfing, a very nice bullish engulfing. I'm going to wait for a correction somewhere between 118 and 120 again. 121 and okay, so let me go to the 1 minute and see how it looks like. Okay, so it broke above all of these. I'm going to wait for a correction and I'm going to give it another chance. Um, a good entry would be this. Well, it stops here and TP here. That's actually an identical risk reward. That's 1 to how much? That's a 1 to 7. New order, pending order, buy limit. 18. I think I already missed it, but I'm going to place the order anyway. 108. Take profit is 188. It's actually 1 to 8, not 1 to 7. How? $108. Okay, 1 second. 108 point something, 0.5. So how much am I losing in this? Okay, makes sense. And how much are we making with this one? Sweet, nice. Yeah, so I have my buy limits at 118 with my stops at 108 and my TPs at 188. Okay. Yeah, Mesa, whatever works for you. The best method you can use is the method you understand best. All right, guys, I think this is it for today. We had a productive session. We had fun. So for me, I think like to wrap up this analysis, I think as I told you, it's going to drop to 108, 118, and then continue going upwards. If it doesn't, then we wait for the 4080. I have my alert there. If I get to 180, or sorry, 4080, this would be actually a high probability area to catch a good trade. So I would be watching for an entry at around 4080 with stops below 4050. So that's a big stop loss, which means it's going to be a high probability trade. Because the risk reward is what, 1 to 2, 1 to 3, maybe at best. So yeah, if it reaches like 4080, then fine. If it doesn't, I hope it reaches 118 and like fills me in so that we catch the move upwards to 4200. My TP on this one is 4188. All right. So thank you everyone for watching. Thank you for joining. Thank you for your amazing questions as always. If you have any questions, please reach out to me personally. I'll be more than happy to answer you and answer your questions. As always, thank you, Amiza. Thank you, Arif. Welcome back, Madara. Thank you, Yahya. Thank you, Patrick. And thank you, Soham, Mr. Breva, everyone, guys. Thank you. I appreciate you very much, and I hope to see you on the next one. So take care of yourselves and good luck trading. Bye bye.